Good evening once again, and welcome to yet another session on technical analysis for profits. I am Raja Venkatraman out here, and I would like to find out whether the audio and the video feed is in order. There are some questions which are appearing whether the webinar has started. Let me inform that the webinar timing is from 6 p.m. So the webinar has just begun. The initial part was to ensure that people are signing in and they are able to get the audio and the video feed. If the audio and the video feed is all right, then we would like to begin. So please type in with a yes. Okay, some of you out here are already familiar with technical analysis, while some of you are right now flirting with this subject, trying to understand how well does this subject work. Will learning this subject give me some profits? I can surely say that after working for more than 10 years with Dr. Narayan, I am convinced that till the last day of my breath, I will be sworn to technical analysis. And from the subject of technical analysis, Fibonacci brings out the best in the prices. It shows you a lot of nuances. It shows you a very good entry and exit points. Today, I would like to share with you some idea on how to beat the odds with Fibonacci. That's what this program is all about. Well, coming to today's session, what are we going to cover today? We'll have a brief idea on what is Fibonacci all about. Well, Fibonacci, we all have heard Fibonacci ratios, retracement, extension, projection. All these words zip across our mind, and soon you start getting confused. We all, for those who are yet to know about this, they would be seeing it on some charts and they would be wondering what are these lines all about. Well, your understanding of Fibonacci will get clear to an extent through this at the end of this webinar, I'm sure. We'll be discussing about Fibonacci retracement, which is a very effective way to find out whether the prices have come into support or traded into resistance. How do you go about selecting the relevant swings? Swing selection is very critical for drawing Fibonacci retracements, and we'll be seeing how to draw a Fibonacci retracement in our live examples section, where we'll see what are the possibilities which emerge in the coming days for this particular securities which we'll discuss. Then I'll also highlight to you what are the various Fibonacci concepts and tools and what are the impact it can cause in our daily trading and investing pattern. And at the end of the webinar, I'll be showing you how you can actually explore these concepts of Fibonacci and ensure that you're able to participate in market irrespective of its volatility. Okay, let's get going. Fibonacci was developed by Leonardo Fibonacci. He is a mathematician from Italy, and he found out a certain pattern in these number formation. So what Fibonacci does is it tries to understand. His name was Leonardo Fibonacci, and that's why this entire mathematical series is called Fibonacci series. I'll show you how the entire series was structured. For example, if you take 0 and 1, you get 1, then you get 1 and add it to the previous one, you get 2, and then 2 plus 1 is 3, 2 plus 1 3, 3 plus 2 is 5, 5 plus 3 is 8, and so on. So what Leonardo found was that there is a relationship between these numbers, and these relationship between these numbers, he termed it as Fibonacci summation series. And the technical analysts, what they did was they took these relationship and they transposed it on the prices, so that you could arrive at some kind of relationship between the prices and arrive at some conclusion on how well these numbers can be structured, and how well we could find out where exactly the prices are, if the prices are heading into support or they're heading into resistance. Well, this series is called Fibonacci summation series, and the first ratio, the most minimum ratio is 23.6, which is three places to the right. You divide one number by three places to the right, you get 0.236, which is 23.6. If you divide a number by two places to the right, you get 38.2. And if you divide a number by the immediate next number, for example 89 by 144, you get 0.618. So what does it say? It says since it's below 100 or it's below 1, it's a contraction. So that's why. And 0.618, beyond beyond 5, if you start dividing all the numbers, if you divide 5 by 8, 13 by 21, so on and so forth, you will get 0.618, which tends to become consistent, and that's why it is called as the golden ratio. Apart from this numerical series, there are also other facts which are found in nature, which will which will give you enough evidence that this 0.618 is a very strong ratio which is existing in the universe, as well as these numbers. Since any ratio below 1 is contraction, so 23.6, 38.2, 0.618, they are called contraction, and 0.618, since it's a golden ratio, it's called golden ratio of contraction. And above 1, when prices move beyond 100% of any swing, then it is an expansion. So in that case, it's called golden ratio of expansion. How to calculate golden ratio of expansion is covered in extensively in our Applying Fibonacci Techniques webinar, where Dr. Narayan goes through the basic concepts of Fibonacci, the structure of the golden ratio, and how all the numbers can be put together and analyzed to find out ideal trading opportunities. Today we will be covering a part of that particular webinar, which is a subset, which is called Fibonacci Retracement. You can see here, golden ratio is spread all across the universe. You can take the painting of Mona Lisa, the entire face, it's 0.618 of the entire body. The face, from the chin to the hand is 0.618 of. Then you have the sunflower where the whorls are in a Fibonacci relationship. You have the fruits, like for example banana has 3 sections while apple has 5. You can take your hand. Your hand has 8 fingers in total, 5 digits on each hand, 3 bones in each finger, 2 bones in one thumb. So this way, this particular ratio found a lot of commonality, and hence this was considered as a golden ratio. So how do we use it on the charts? Let's get to that, because that's what is we are interested. So what I have shown here is three main ratios which you have to look for when you're beginning with understanding Fibonacci concepts. First is 38.2 and second is 61.8, and you have a third number where normally 50% is the average human mentality. Anything which comes to 50% of its cost, we either tend to exit or we either tend to average. So 50% is a mental and psychological level which is existing in our daily routine or in our trading routine. So that's why 50% is also considered as an ideal level to take a trade. So these are three ratios which we'll be looking at today. And if you see here, prices move from point 0 to A, and then it comes down, and then it comes down, and then again this comes down. So all these points, the yellow lines which I have marked, they are called retracement. By retracement we mean prices are going against the normal direction in which they were traveling earlier. So for example, if prices were moving from here to here, then prices retrace from A to B. Again, it's 0 to A, then A to B. So prices are retracing from A to B. So when prices are retracing from A to B, what exactly does this 38.2 refer to? It refers to 38.2 of this entire swing. This is a rise and this decline is 38.2, or just more than a one third of this entire swing. So from here it has reacted. So this is 38.2, this is 50, and this is 61.8. And whatever purple lines you are seeing are the ones which are drawn by a software. You just fix a point A, you fix point 0, fix point A, then you get the retracement level. These are all retracement level. And what we are saying is three different retracement level: 38.2, 50%, 61.8. Is everyone clear so far? Any questions at this point in time? Great. Retracements are always drawn on prior moves. You need to have a prior move. I'll show you some examples. Things will get clearer. So first you will have to find out a reference swing, because you are finding out a retracement to a particular swing. So you'll have to first find the correct swing on which you'll be drawing the retracement, so that your understanding of the swing becomes clear. I'll just show you. Okay, this is an example of Infosys. You can see here, this is your reference swing, and prices pulled back to 38.2. It gathered support and then it went up. So this is your reference swing. And this is the retracement. You can see this is the A point and this is the B point. So A to B, it halts at 38.2 and from then again it takes off. This again is a sharp move upward. Every sharp move, Fibonacci will do a wonderful role of finding out whether the price are traded into resistance or whether it's traded into support. There are many sets of Fibonacci tools. The Fibonacci mathematical relationship has been developed into various concepts and various tools, And like retracements, there are other concepts which we can use to find out whether the prices are trading into resistance or supports, and these nuances is what enables you to plot it well ahead in time. Just see, for example, you are actually tracking SBI moving up, and when it starts sliding, you wonder what action should we be taking here. And then when prices, so you can actually keep your retracement ready, and you can wait for the prices to react into this 38.2 support. You have a green candle which emerges, then it's the best point to go long, because from here your stop loss is pretty close, and from there on prices have taken off. So this is the way to use Fibonacci, because you are able to plot the price movements well ahead in time. You can just have your Fibonacci setup ready. As prices react into the relevant bands, you can take the action. Well, this is again the whole swing, and you can see prices have reacted into 61.8. This is of HDFC. It reacts into 61.8, and then you see a strong bullish candle emerging. A person doing Fibonacci is already forewarned. He is ready with his tools and he is ready to take the action. On this particular day, if you had used maybe a opening 30-minute range and then taken a trade, it would have been a very low risk probability. Taking a low risk probability trade, that's what is the aim for any trader. Any trade with low risk probability will ensure that you are always in the game. You can see here we drew a Fibonacci retracement from this low to this high, and bang on at 61.8. It took fantastic support and it's bounced from here. A very low stop loss on this day could see you making good return. There is a question asking whether SDFC at 38.2 there is a doji. I am referring to the 61.8. At 38.2 it didn't give you a sufficient indication. On 38.2 you would have entered long, your trade would have got stopped out, but then it gave you a chance again at 61.8. You can see here that at every Fibonacci level you could have taken a trade. You could have taken a trade here, your trade might have got stopped out. The stop loss was close. Again, you didn't have any trade emerging here, and then the next trade was here. So ultimately, technical analysis is all about probability and it's not about certainty. So what Fibonacci does is it reduces the chance of taking some vague trades, and it gives you ideal entry and exit points. So on this day you would have taken a trade, and maybe this is a daily chart. If intraday, if the trades are not working out, maybe you would have exited or would have held on this day too. You got a decent profit of around 25-30 points. Well, if you're a positional trader, then you should also look to buy on dips. That's how you should play this. If you're an intraday player at 38.2 on this green candle, if you are traded long, you would have made around 25 rupees, which is around 2%. It's not bad in 2 days. And then there is a strong pullback to this level, and then you could take a call out here. Is it clear? Okay. Then another example of bail. Again, this is a psychological level of 50%. and you also have the previous lows. You could use that as an additional indicator. The previous lows coming here, you have the 50% coming here. It gives you a good point to go long because your stop loss is very near. And from here you can see you got a 20% jump. So you can see how useful Fibonacci is. You could have this chart plotted when the stock was falling. If you didn't intend to go long, then you could just wait for reacting it into ideal supports which are laid out by your Fibonacci tool. There's a question asking where should one keep the stop loss? If you have taken a trade, for example in BHALE, your stop loss will be below 240, and you could look to trail the stop loss by whichever method you choose to. You could use the ATR methods, or you could use the parabolic SAR method. You could use any of those methods to trail the stop loss, and then once you went long here, then you could trade. So if you suppose you had gone long at 246, your stop loss will be below 240. Your stop loss will be here. Then once it starts moving up, you can book profit and revise your stop to cost maybe. So that way you could actually action this trade. Is it clear? Fibonacci itself has many tools and many concepts which tells you whether this is an ideal point to buy or whether you could wait for certain other levels to exceed so that you could take the trade. Okay, we saw how the trades work fantastically well in giving us ideal supports to go long. In the same way, now we'll see how to find out whether Fibonacci works equally well in the downtrend. Because when market falls, people are not ready. They are busy exiting their longs, or they exit very quickly. So what we're trying to say here is, do not blindly buy or sell the stock simply based on the fact that it is approaching any Fibonacci retracement level. Like you saw the example of BHALE, try to find some evidences which corroborate with your findings in Fibonacci and then take suitable action. Fibonacci gives you very good entry and exit points with minimal stop loss. However, it requires a certain amount of wisdom to be exercised when you are executing the trade so that you do not take a trade blindly or take a trade without cognizance of what's going to happen. So some elements of technical analysis needs to be adopted and applied so that your implementation of the trade is appropriate and keeps you and helps you generate consistent profit. All right, look at this chart of RCOM. It works on daily. In some time I'll show you the intraday chart as well, and this is a weekly chart. You can see here the sharp decline and a brief rally. You can see here that I had shown earlier the minimum is 23.6. See, prices are halting at 23.6, and even the sharp rise seen here, it hits 38.2 and there's a sharp supply, and eventually prices are now heading lower. So this is a good spot for you to go short. Even if you keep initially a stop above 118, the prices as it starts gliding and declining lower, you could trail the stop. Like I said, you can adopt any of the methods which you are comfortable with and trail the stop loss. And here, if few of you who know candlesticks, there's a hammer pattern at the low, so you could actually book your profits here. You can see here from 109 to 75, which puts it at 35 points. Pretty decent trade, so almost 35% within a space of 2 months though. But then patient space, and Fibonacci is a great example of patient space, because once you draw the Fibonacci levels, you just have your set of stocks, draw the retracement, and then you could take the trade. There's a question asking whether it works well only on the weekly. No ma'am, it works well on all time frames. I'll be showing you the examples. I was happy that you asked, because this is a belief which many people have. It works well on daily, weekly, even on 5 minutes. You could work it on 5 minutes. Only thing is, if you are doing on a smaller and smaller time frame, your target potential will be much smaller. So one should not get greedy out there, and they should actually be booking the profits ASAP. Now going forward, there's another example. I'm just trying to highlight the power of Fibonacci. You can see here again reaction into 50%. I'll be showing you some live examples on the daily as well, and also on the hourly, so that you get an idea of how this tool works. See here reaction into 50% and a long upper shadow, which indicates that the sellers are still in control. So this sign should be taken as a sign to go short. Even if you didn't short it here, you could short here and then all the way down. This is again reaction into 61.8. You can see here there is a twin reaction. This is the first one. There's almost reaction again into this, and you can see here it's like a double top, and prices are now heading lower. So this again is, you have to combine more than, you could use your candlestick studies along with Fibonacci tools. It gives very good results for traders. Well, we have seen how Fibonacci retracements are giving fantastic results on the charts, helping us identify a lot of potentials for trading. I would like to highlight that there are some other tools in Fibonacci which called Fibonacci retracement. It's a 2 point, it considers 2 points. I'll just go back to the slide once again. You can see here it considers 2 points, A and B. From this point to this point, you consider only A and B, and it calculates the up move. There's only 2 points. There's only 2 points. It considers only 2 points. Similarly, Fibonacci extension is a different way of calculating Fibonacci levels when prices move beyond 100% using 2 points. And in another set of studies, it's called Fibonacci projection, where the concept takes it to 3 points, where when prices begin to move beyond 100%, the same way I'll just show you the chart which I shown you earlier. This is 100% of the move, and this is your 38.2. But what happens when prices go beyond this? That's where these two concepts come into play: Fibonacci extension and Fibonacci projection. They tell you how to handle these strong moves so that you are able to profit from it, and also take into account the entry and exit and profit making opportunities. And then Fibonacci has a concept called Fibonacci cluster, where in this applying Fibonacci technique program, sir will be covering how to combine Fibonacci concepts to find out an ideal entry or exit point, where, like I said, all retracements may not be the ideal entry or exit, but when you are starting off, Fibonacci retracements gives you a good idea of support and resistance. But then if you start drawing Fibonacci retracements from tomorrow, you will find that certain retracements fail. So this answer of why this particular retracement failed, that answer you will get when you start applying Fibonacci clusters. Fibonacci fan is another aspect of Fibonacci mathematical relationship, where your concept of trend line is inbuilt, and it's basically Fibonacci trend line based on the mathematical relationship. It's a 38.2 Fibonacci trend line, it's a 50% Fibonacci trend line, it's a 61.8 Fibonacci trend line, and the same concept of trend line is built into Fibonacci arcs, where semicircular arcs are drawn using the same mathematical relationship, and you get an idea of how the price are reacting with with regards to the specific arc. So all these five items are with respect to the price formation and the price movement. But Fibonacci has also developed a concept on Fibonacci time, where you have got the Fibonacci rule sets which define which will be an exact turning point, and all these are covered in our applying Fibonacci technique program in more detail. So I have given you a brief glimpse on what is Fibonacci, how it was developed, how it was conceived, and why is the need to know Fibonacci. And now, as I near the end of this program, I would like to tell you how Growth Avenues and Dr. Narayan will show you how to take Fibonacci to the bank. That's what we all want, right? We all want to make enough money so that we can retire early. And that's the race we are day in and day out. And in that race, Fibonacci is a key component in your arsenal, which one should adopt and start implementing it from tomorrow. This applying Fibonacci technique is right now available in our webcast mode. By webcast, we mean it is a recorded webinar which is available. You could see it n number of times up to 3 months, where Dr. Narayan will be covering on the nuances of Fibonacci, how each component of Fibonacci is conceived, how each component of Fibonacci needs to be applied. so that you can identify the relevant swings on how to draw the Fibonacci tools and get started on your trading capability. What this webinar does is it enables your ability to spot reversals. It enables your ability to spot trades which are come into supports. For example, we have one of our analysts continuously dedicated to only drawing Fibonacci, and he's been at it for more than 1.5 years, and it has taken him more than 1.5 years just to come to a level where he's able to say with confidence. So it is definitely not, you won't have a scan where you just say scan and you will get all Fibonacci at 38.2 or 50%. But yes, there is lot of reward waiting at the other end of the road. If you're willing to work hard with Fibonacci, you get fantastic entry points, and this is one of the tools which Dr. Narayan uses quite aggressively and quite extensively in his trades, and that is why he has shared with us his understanding and his knowledge and the simple way in which you could implement the same in your trading style. And like I mentioned earlier, this webinar will be covering on Fibonacci ratios. It will be covering what are the relationship between the ratios. It will go beyond what I mentioned briefly. Then it will talk about the contraction ratios, how it has been conceived, what is the relationship, etc. Then there is Fibonacci extension, projection, talk about Fibonacci clusters, how to use Fibonacci time, and find out turning points in the market so that you are ahead of the street. Well, why to do a growth avenues webinar? You save costs, you have excellent technical support, you have a dedicated chat team as well as online email support who answers all your queries, and all our webinars or webcast live webinars or webcasts are easily viewable in all the latest devices. And most of all, as a few of you who have already been part of our other webinars would say, it's a value for money. Whatever investment you make with growth avenues gives you many times over. We constantly sell you the concept, we don't sell you the software. We are interested in you making money along with us. So that's why Dr. Narayan, through his numerous webinars, shares with you his wisdom learned over the last 37 years, and he still continues to find out what are the new ways in which this entire field is changing, and he shares it through his webinars with audience in India and across the world. So with that, I come to an end of this webinar. This webcast is a fantastic way for you to further this knowledge which we have at Growth Avenues. You could understand and take your knowledge further. Our support team is there round the clock. We will give you enough evidences on how to understand the markets and how to take it forward. And before I conclude, I'll show you some examples so that there were some queries whether it works on hourly charts. This is a chart of Bata. I take the retracement tool. You could see here Can everyone see this? You see here, prices took support at 38.2. It formed a green candle and you got a good rise out here. This is on the way up. This is on hourly charts. I had a query asking whether it works only on the weekly. That's not it. It works well on the hourly also. Moving forward. Here we took this as the reference swing, and this was the 38.2 of this swing from where the prices reacted. Now in this case you can see here that this is a reference swing which we have considered. This is a reference swing which we have considered, and prices have reacted into 61.8 and they have halted at 1107. So tomorrow, if Bata doesn't seem to go up further, you could have a stop above 1107 and take a short trade. Are these two examples clear? Okay. Going forward, I'll end the chart with my observation on Nifty. Please be patient. This is the daily chart of IOC. You can see here, this is the low, May 13 low, where it formed a hammer, and that's why I have considered that low, and to this last high. You again see prices holding 61.8. There was a negative candle. Prices didn't go below this, and a sharp reaction from here. So one can consider 61.8 as a good level where prices would tend to react. So when prices approach 61.8, the only caveat here is that you should take the proper swing. So your understanding of swing, your ability to draw retracement, everything will improve once you attend a structured course. And we have one, some may feel that Fibonacci is just another topic in any book. But mind you, Fibonacci is a concept and an ocean in itself. And this is what you will know when you attend our webinar on applying Fibonacci techniques, where the entire world of Fibonacci is explained to you, and that enables you to find out trading opportunities like these. Now let's look at some of the capital goods stocks that have been going great guns. See here, I have chosen L&T. This is the most recent swing. So What is LNT trying to tell us? It has closed comfortably above 61.8. So it's a good place. Tomorrow, if market starts trading well, you know which stock to go long on, because your stop loss is also very close by at 61.8. Is this clear? Okay, now moving to the last chart for the day, which is on the Nifty. On the Nifty, we'll be taking this swing. Since these are similar highs, we'll be taking this high, and we find that Nifty has room till 8235. So we should be looking some halt in Nifty around this level 8235, because you can see there's also the previous low as well as a gap region out here which could halt the prices for now. Is it clear? So this way one can use Fibonacci and arrive at suitable conclusions on how to take trades, because Fibonacci is a great tool to find out low risk opportunities, and many concepts of Fibonacci like Fibonacci projection and extension, which are explained in great detail in our webcast applying Fibonacci techniques, they will enable you to gain more clarity on this subject, and Dr. Narayan through various examples will give you enough evidences on how these tools work. We have our support team who are constantly at it, and they will be engaging with you through various support webinars which are being held from time to time on these relevant webinars. You could write in to us with your examples and we'll send you with corrections if any. This way you can keep progressing your learning. There's a question asking, why did you choose this particular top? The reason is that there is no specific reason. All the tops which if you see here are at the same level. If you can see, you can see the markings which I'm showing. This is what I had mentioned while choosing the top. You can see this level. All are similar highs. So I've taken from this high to the extreme low, which is 1000 points lower, and I have drawn a Fibonacci retracement of this swing. The reference swing should be the point which you choose, the point A and B. Your point of reference, in the sense the point which you are considering, for example today's closing, it should be between this is A and this is B. Your point should be between this. Well, you're drawing a downsloping retracement, so that's why your point which is circled should be between A and B. Then only you'll be able to know at which stage of the mathematical relationship of the prices you are in. So right now you are closer to the 61.8 of this entire move, which is at 8235. Is it clear? And if you see here, all these highs are the same. Okay, we come to the end of this webinar. Before we conclude, I would like to ask if anyone has any specific questions on whatever we have covered. You could write into us, and for those who are interested in taking the webcast, you could call on this number 93246 70120 and get more details about the webcast. Okay, thank you once again.